interrupt your regularly scheduled programming to bring you this ad hoc special edition charter flight 16.523 of the Pilot Money Guys, where we cover some airline news and, of course, a financial topic. We're going to talk today especially about the tax proposals in 2021. We aim to educate and bring some lighthearted financial fun to your day. I'm your host, Rob Eklund. Your flight crew today is the professor. Of course, we need a CPA to talk about this stuff. Certified financial planner, Kevin Gormley. Hello, Gormley.
Here.
And of course, our very own Mr. Cowbell, the Ben Dickinson. Welcome, Ben.
Thank you. Good to be here. Also present.
Yes. Present. Today, we're going to cover the potential tax changes coming right around the corner. We're recording this just to kind of give you a buffer here. So if we make any mistakes, this is the 24th of September, 2021. All of it we're going to talk about, the tax proposals at least, is all subject to change. It's still going through Congress, and who knows what could happen. So this is just kind of a precursor of what could come. Things can change, but some of this is likely to pass. Enough of that. Let's jump into some aviation news. I've got the first one. We're talking about the Air Force's KC-Y bridge tanker, which apparently is going to yeah, it's another tanker. I know we thought we had enough of those with the KC-46, all you air refueling geeks like myself out there. But the KC-10's going away, and they really don't have much to replace it with, so they're coming up with this next tanker. Lockheed Martin has joined forces with Airbus, and they're going to produce Airbus 330 that's called the LMXT, which stands for Lockheed Martin Next Tanker. And apparently it's going to be bigger, better, badder than the KC-46, be able to go more places and do kind of the stuff that the KC-10 could do that the KC-135 could do. At least that's my perception. It could go to more airfields because it's got, bigger wings and more useful load and all kinds of good stuff. So kind of cool for the KC-10 folks out there. I was really questioning why they were getting rid of the KC-10 when the KC-46 wasn't all up to speed. And I could geek on about that for a long time, but I won't bore Kevin and Ben, the professor, with this. I can see glazed over looks right now. Yes, Kevin, you raised your hand.
Yeah, I mean, how many kids, right now are 10, 12 years old and their dream is to fly a KC-10? I mean, probably a lot of them, right? Is that something that you dreamed of doing, Rob, when you were a kid?
I dreamed of flying. I don't know if per se the KC-10, but all of the impact I've had around the community here, at least one wants to fly a KC-10, or they used to. And
after seeing you fly, they wanted to, right?
Yeah, we got to get some video footage of you flying it. I mean,
oh yeah, for sure.
That would be exciting.
We'll have to upload that. It's pretty good. Now that I'm
retired, Top Gun 3.
You think you can do a barrel roll?
Top gas station in the sky. That's right. Absolutely. Okay, let's get into the next piece is Inspiration 4. I've got my special cup here. Failure is not an option in recognition of the first all-civilian space flight, and they did awesome, I think. They landed. They went around the Earth several times, and the first civilian space flight, as far as I know, right?
Yeah.
So, Rob, when you say first civilian space flight, those other two civilian groups that went up, they were kind of in space, but this was the first time a craft orbited the Earth. Is that correct?
I think so. You're challenging my knowledge of this is not great. As far the headline says, first all civilian crew goes to space. I think those other crews had military folks on them, right? Even though it was billionaires. They grabbed all the headlines, still the military folks doing the work.
Yeah.
Oh,
yeah. I think Bezos just didn't do anything.
We're going to make sure Ben puts that in the show notes. Whatever. Yeah.
Whatever the right answer is, we'll put it in there. We'll find it and throw it in there. Yeah. I did find out something interesting though about this. Maybe some drama about Inspiration 4. Which is that they had some toilet issues on the plane.
Never
This is
good-
a
never a good thing.
direct tweet from Elon Musk. Definitely need to upgrade toilets. We had some challenges with it on this flight. Now, I'm just trying to envision this right here. No low gravity, very low gravity. That's not sinking down. I wonder what kind of issues they had this. That
sounds
there's going to be
bad.
some stuff floating around.
That sounds bad.
Yeah, it must have been pretty bad for that to have become an issue.
Ben,
Especially
you need
with
to
4
put some
civilians.
side effects in there for sure.
Yeah.
Oh yeah.
But Rob, isn't that usually on commercial aircraft? Isn't the toilet usually the most drama on any flight? From what I've heard, that
pretty
people
much.
Flushing paper towels and and stuff like that and leaving it a
Things they're not
mess.
supposed to put down. Yeah. Smoking in the bathroom. It's just a what would you call that? A something show? Yeah. It's a lot of fun. A lot of fun. For all you airline passengers out there, let's just get a couple of ground rules right now.
Yeah.
Okay. If you're gonna go number 2, you go to the back of the airplane. Don't come up to the front where the pilots are. Let's just go to the back. Have some common
But the
courtesy.
first class toilets are so nice. Come on.
Well, that's a good point. Southwest, it's all first class, Ben. Okay.
Yeah, I know. You guys get the nice comfortable seats. They really contour. All right, we can cut that one out.
Cut.
Next.
All right. What else? Anything else for aviation news? Anyone? Did you have a top 10 list you want to go over real quick?
I can go through it really quick if we want to go through this. I think it's a pretty good top 10 list that I think people will be interested in. I sure was entertained. So this one right here is the top 10 weirdest airplanes of all time. And I'll just burn through this really quick, add some comments about these. The first one is number 10, and it does look pretty weird. It's the Boeing X-48, which is currently under construction, has a 21-foot wingspan, and it is being developed as an unmanned aerial vehicle. So it's kind of a weird plane. Next, we got the Horton Ho 229 airplane. This was a World War II German fighter bomber plane, and it looks pretty futuristic. It looks like it's out of the Jetsons. Pretty cool. Have you heard of that one, Rob?
I saw a picture of that way back when. I think it almost looks like something out of Captain America. The plane crashes, similar.
Yeah, it does.
Smaller.
It's got a nice bubble in the front.
We're gonna have to. What we'll have to do is we'll have to put all these pictures.
We definitely will, because these are great. And they start to get more familiar here. The next one is the Airbus Beluga, making it onto the list. I knew it'd be on here. Wasn't sure where. It's the A300-600 wide body aircraft, and it is used to carry the aircraft parts and cargo that are either too large or awkwardly shaped. And it took its maiden flight in 1994. Weird looking airplane. Honestly, one of my favorite looking airplanes. It just looks like a Beluga, but it looks ridiculous. So
yeah, and they even paint it most of the time to smile
to make
it Beluga. Well,
you have to. That thing, go look. If you're not sure what a Beluga is, look that up. That thing, it looks exactly like that. Number 7, Super Guppy airplane. Yeah, I mean, come on. It looks. It's basically the original Beluga. Came out in 1965 and operated by NASA. Love that one. Let's see. Number 6, the Dreamlifter. So this is the Boeing 747 Dreamlifter. Does that sound right? It's 235 feet long and a cruising speed of 474 knots. 211-foot wingspan. Number 5, the Flying Pancake airplane. This one intrigued me the most when I saw it, because I did not know that this plane existed. This was, when did this come out? I think this came out in the 30s, I believe, but it looks like a giant Stingray. It was used by the Navy. It's called the Vought X5FU plane. XF5U, excuse me. Maximum speed of 550 miles per hour and maximum takeoff weight of 18,800 pounds. Quite impressive.
Nice.
pretty weird. Only needed one pilot as well. And this one, it looks like
That's
a
an
flying
ugly.
pancake.
That's an ugly airplane. It looks like a crab.
Yeah, it really does look like a crab.
Yeah.
It's
Wow.
not meant to fly.
Yeah, no, do not know. All right, number 4, Callinan K7 airplane. This one to me looks like it's out of Star Wars or Star Trek or something. Yeah, it is one of the. It's also called the Russian Flying Fortress, developed in the 1930s, and it had 11 members. 140 miles per hour was its max flying speed. Could carry 120 passengers and 15,000 pounds of mail. Or 15,000 pounds of mail. So that one, yeah, looks crazy as well. Number 3, the Northrop Tacit Blue airplane. It was developed by the U.S. Air Force in 1982 and was considered the best technology on the planet. It has a gross weight of 30,000 pounds and can fly at 290. Now, you guys got to look that one up. That one's pretty interesting as well.
Yeah, that Russian. Just to back up, so the Dreamlifter was made because of the Dreamliner. The parts were too big, and so they had to make those special 747 aircraft to haul the parts. But that Russian Flying Fortress is something out of a movie for sure.
Yeah, that one. We'll definitely put this one on there, but you're gonna have to look that one up.
You gotta look that one up.
Never seen that one up.
That's crazy.
Number 2, the Pregnant Guppy airplane. So they got a lot of guppies, bigger. This one flew from 1962 to 1977, wide-bodied cargo plane used by NASA to transport components of the Apollo moon program. So very interesting plane there. Could load capacity of 141,000 pounds and a max flying speed of 320 miles per hour. It just looks like a big pregnant fish, I guess. That's why they named it that. The Spruce Goose comes in at number 1. I think this one was coming. Howard Hughes. It's an all wood airplane built in, what is it? Only flew once in 1947. Carried 700 passengers and is the largest flying transport ever built. The wingspan was longer than a football field. The Spruce Goose was actually a flying boat and could hold up to 150,000 total pounds, including 2 30-ton M4 Sherman tanks, also known as the Flying Lumber Yard, and today is in the Evergreen Aviation Museum in McMinnville, Oregon. The Spruce Goose.
McMinnville. Yeah, beautiful.
Yep.
That guppy, if you ever fly into El Paso, a lot of times you'll see that super guppy, the NASA one out there.
Oh, yeah.
I've never actually seen
the pregnant guppy.
Yeah. The super. Well, is it the?
I don't know why that's what they call it.
Right? It might be the pregnant guppy. Yeah, but it can. I think it can carry T-38s in it, which is the F-4 fighter in Top Gun. For all you Top Gun fans out there.
Nice.
You'll
So Ben, where did you get that top 10 list?
I got that top 10 list from arrowcorner.com.
We'll link to it in the show notes.
Yeah.
Absolutely.
You got to check it out.
I mean, that was super great. Let's get into even something more exciting, right?
Yes.
Taxes.
Oh, yes.
Taxes are coming.
That's why we got the man, the myth, the legend, Kevin
The
on.
professor.
The professor.
All right.
Here.
These tax changes are coming, Kevin. You want to walk us through some of this stuff?
Yes. So I'll tell you this, Rob. Whenever we hear about tax changes coming and we're doing tax returns, we're CPA or we're a tax professional, immediately we try to disregard because we have last year's tax return in our mind. We have this year's what's happening with taxes. And then we hear about all these projected taxes that are coming. And most of the time they don't come true. So usually we're very skeptical or maybe we just wait. We just wait and see what's passed. But, this time around, especially in the world of social media, things happening so fast, a number of clients have actually mentioned that they know tax changes might be coming. So really, that's really the focus here is to discuss what probably will happen, what could happen, and also some of the things that a lot of people have heard are going to happen, which are really bad, which probably are not going to happen, Rob.
Yeah. Well, fantastic. So the first one that I think is on a lot of people's minds, just the regular tax rate, the marginal tax rate is increasing
Yeah.
from 37% up to 39.6%, right? And that's for married filing jointly folks above $450,000.
So the 400,000 and the 450, one of the things that I do like might be the wrong word, but that at least I'm relieved with, Rob, is that they are focused more on people that make more than 400 and 1,000 if you're single, and 450 and $1 if you're married. 450,000 $1, that is. But the issue that I find is that people that make more than that amount of money still don't feel rich, still don't consider themselves rich. So if you're in that area where you're above 400 or 450, it still can be painful. But you're right. For the most of the pilots that we work with, they do get around the 400, 450 mark when they're captains. But for most people, the tax changes will not affect them, which is great news.
And even if you did make $450,000, $450,001, that 39.6% is only taxed on that $1. So
that's
just
exactly
to
right.
clarify that. It's only the amount over $450,000 that applies to. Let's kick it off. Sorry, kicking off is not the right word. Let's talk about capital gains rates, which is right after the marginal tax rate. A lot of people start thinking about the maximum capital gain rate is going to move from 20% to 25%, right?
Yep.
So the rumors were out there, Rob, that it was going to go to 39.6% for people that made more than $1 million. Which, again, we have a few people that make more than $1 million of income. Most of the tax that we're talking about is income. It's not really wealth or the rich. And I use the rich in quotes. So that's right. If you make more than, again, 400,000 or 450, then your capital gains will be taxed at 25%.
Yeah, that 400 is for the single filers and the 450 is for married filing jointly. Just to make sure everyone knows that. That's the amount we're talking about for the capital gains. Ben, what do you got?
I got something. I've heard a rumor going around that they are planning to tax unrealized capital gains. Is there any truth to that in this plan so far?
All right, Ben. Did you see that on one of your Snapchats?
Hey, I saw it on my. You mean my TikTok? Yeah, TikTok. I saw it on there. Yeah,
TikTok. Yeah. So I think that that's a good point. People will ask us, well, should I hurry up and sell my investments and get my capital gains? So that's called realized capital gains. When you realize it is when you sell it. So if they ever taxed unrealized capital gains, I'm not going to say something like I would eat my hat or something like that or leave the country because I don't feel like eating a hat or leaving the country. But that would be really hard to tax unrealized capital gains. But who knows? The creativity of the Congress, it's always possible, Ben. But I've not heard that.
Okay, good. I definitely don't want that to happen, but I've been hearing those rumors, and I honestly just wanted to dispel that because I feel like that is kind of going around. But
the other thing with this capital gains is, most of the tax laws, as far as I can tell, with this legislation, it can bounce back and forth, is my understanding. You know way more about this than I do, Kevin. But most of the time, at least on this legislation, will go into effect 1 January 2022. However, this is one piece that may be backdated, I guess, to the time that the legislation was proposed, which would be September 13th, 2021. So you wouldn't even if you sold right now, in theory, if that holds, which it may or may not, you wouldn't be able to get around that anyways. Any thoughts on that?
Yeah, Rob. So, when we say that people might not make 400,000 or whatever the figures are, sometimes people will sell a second home or a rental home, and they will be pushed up into these high, people can make $800,000 in a year because they make a profit of $500,000-$600,000 on a home. That's happening now. So yeah, the strategy a couple of weeks ago might have been to hurry up and sell it, but again, that's really hard to do. So, but there is a date right now, which the Congress has said if you sell after this date, you will still get hit with the higher capital gains. So you're absolutely correct. So any capital gains after September 14th, 2021 may be taxed at a higher rate.
Fantastic.
Wow. That's big. That's big to know that. That's interesting.
Moving along here, we've got the 3% surtax. And for all of our individuals out there making more than $5 million a year in what we used to call MAGI, modified adjusted gross income, you're going to be taxed at whatever you make over the 5 million of 3%. Is that right? Did I say that right, Kevin?
Yeah. Let's have some fun here, since none of us make over 5 million, know anyone that makes over 5 million of income per year. But if you take the 39.6, add the 3%, and you live in the state of California, well, then your tax rate would be 59.7. 59.7. So you'd be sending in almost 60% of your money to the local and federal government. And that's the reason why, what was that golfer's name, the left-handed golfer that left the state of California? Because
Phil, was that Phil Mickelson?
Phil. So Phil left. Phil Mickelson left California. Yeah, he left because he didn't want to pay those high tax rates, and some people really hammered him on social media. But can you imagine if you're someone like him making, $10-20 million a year, and now all of a sudden you get to keep 40%, and you get to be told you're not paying your fair share, I'm sure.
Yeah, that's crazy. And how he got to that is the 39.6%, if you're over the 450, plus a 3.8 net investment income tax. That's the NIT that's been around for a while. Plus the 3% surtax, that gets you to 46.4. And then the California state tax is 13.3. That's 59.7%. That's a lot of tax, but you're making a lot of money. I'll just drop it there.
Yeah. You're rich.
That's a lot.
I'm joking, by the way. That's sarcasm. So don't get mad at me if you're making that money.
Oh, that's good stuff. We got the creation of a cap on the maximum amount of a taxpayer's QBI deduction. And if you don't know what QBI is, it means it doesn't matter to you, so don't worry about it. But qualified business income is going to be capped at the maximum deduction for that would be, for joint filers, 500,000, single filers, 400,000, and trust and estates, 10,000. Okay. Let's get on with what everyone's been really talking about, at least in our circles, is the disappearance of the backdoor Roth and the mega backdoor Roth. Kevin, this is right up your alley. Take it away. What do you got?
Yeah. So those of you that have had it on 2 times speed so far, that's okay, but slow it down now to maybe 1.25. And so the Roth conversions, I mean, that's a huge part of what we do as financial planners. What people in our income thresholds do is they either do the backdoor Roth, or some people even, Rob, they put money into their 401k as an after-tax, and they do the mega backdoor Roth. If you have after-tax money going into IRAs now, going forward, you can no longer convert those dollars. So I don't know exactly how that's going to work, but it basically takes away the backdoor Roth for people. And this is really important for people that maybe are married, filing jointly around the $198,000 to $200,000, because there might be some strategies here to allow you to put money into a Roth as opposed to a backdoor Roth.
Yeah, and this is one of those things, if you're using that strategy, and talk to your financial advisor, call Ben Dickinson right away and ask him about this. But it's one of those things that if you're going to use that strategy, think about doing it this year, because you can still do it in 2021. But again, January 1st, 2022, you won't be able to do that backdoor Roth anymore. Is at least proposed right now. Again, could change, but that's on the table.
Along with that, is there any changes that people need to take right now that are pre-tax doing the back door? Is there anything to think about for next year specifically?
Well, for people that are near those income thresholds where you can't do the Roth contribution anymore, maybe they should just go ahead and do the backdoor Roth in 2021. because once, usually in 2022, we do 2021 taxes and we realize you made too much. So in that case, you wouldn't be able to do it anymore. So we really want to talk to those people that are in the income thresholds that maybe are doing the Roth contribution directly.
So that's kind of the Roth and the mega backdoor Roth, which not a lot of people have access to, or I should say not as many as would like. And that's, again, just after tax dollars going into your 401k that you can put in to reach that 58,000 mark, if you will, if you're under 50.
Yeah, the only reason I'm happy, Rob, about this is I don't have to explain it anymore, because it's always so hard to try to explain.
It really makes no sense.
Contributions. Yeah, it doesn't.
It really makes no sense to call it.
I think we've had a lot of people ask us if it was even legal or what we were doing. Probably confused a few people, but no, very common thing.
Now it's going away. And one of the other things that is important about, since we're talking about IRAs, is they're thinking about capping how much you can actually have in one of those accounts, retirement accounts, before you can't contribute anymore. And the magic number there is $10 million, which sounds like, a lot of money, and we won't have a lot of folks right now hit that, but in the future, that's definitely a mark that quite a few people, I think, can hit and will hit.
Well, if inflation continues, we can all have $10 million IRAs. All right. That's very sarcastic and mean. Sorry. So this is, I think Thiel is the guy's name, who was the hedge fund person who had and I forget the number, Ben.
Thiel. Peter Thiel. $5 billion.
Thiel, yeah. $5 billion? I was going to say $3
with a B.
Yeah. In a Roth IRA.
So this a lot of people might not think this affects them, but the whole idea of IRA limitations is a big part of the proposed changes. So if you have more than $10 million in an IRA, you have to take an RMD, required minimum distribution, of 50% of the amount over 10 million. And I think over 20 million, it goes up even to 100% maybe of the money.
My understanding is if it's in a Roth, you have to take anything over 20 million out. So Peter Thiel is going to have to take over $4 billion out. And then, then it goes into that above 10 million, 50%. So,
that is.
So the thought process here, just to make sure that everybody understands the punishing of the rich idea here, is we're going to raise taxes on the people that are quote unquote rich. We're no longer going to let them defer the money into IRAs and build up big IRAs. We're going to tax them. And this actually generates tax revenue for the next 10 years. And then the third thing is, if they decide to put it in taxable accounts and get capital gains, we're going to tax that at a higher rate too. It's sort of the trifecta of going after the rich in air quotes once again, Rob.
Yeah, absolutely. And to think about it too, and not everyone can do this, and it's not going to affect, obviously it's going to affect very few people percentage wise, but if you are in that situation where you're taking required minimum distributions and you are very, you're in the rich, like you say, income category, Kevin, then think about it this year. You're at a 37% income tax rate this year when you're taking those required minimum distributions. Again, if you're in that tax bracket, next year you're going to have the 39.6% rate. Caveat, if all this goes through, and then you could have another surtax of 3%. So you're up at 42.6%, and that's before state taxes. That's a 5.6 negative rate arbitrage between 2021 and 2022, meaning just the difference if you wait between 21 and 22 is 5.6%. That's quite a bit if you're up there.
Yeah, and Rob, the other part I mentioned that the IRAs, the laws have changed, or they will change, we think. All the self-directed IRAs and all the people that had non-liquid companies, they start a company, they stick the company in the IRA, all of that stuff is probably going to be nixed. So we get questions all the time. Hey, can I invest in a rental property with my IRA? And the answer is always, you could, but I wouldn't do it because the self-directed IRA is a PITA. And so I would not recommend it, but that looks like that's going to be going away.
Great point. That's important for a lot of folks out there that are trying to do that.
Yeah,
kind of stuff.
I feel like that's been a kind of a viral topic recently. A lot of people have been asking about that, I guess, with the housing market and people being able to do more research and have more time on their hands. But yeah, probably a good thing in the end that one's getting knocked away,
Yeah.
or potentially getting knocked away.
Potentially getting knocked away. The other part to, this whole thing is we're basically going to have the current estate and gift tax exemption. Right now it's 11.7 million, and it's going to be replaced with an exemption of approximately half that, around 6 million per person. That's the index for inflation. But so if you pass and you're trying to give away more than the estate and gift tax exemption of 6 million, you'll be it's that rate. My understanding still remains the same at 40% is the tax rate of money on that, but it's going to be lowered to 6 million. So if you have quite a bit of money out there and you pass away, passing it along to heirs won't be as easy.
And Rob, that amount does include your property as well, right? It's not just your investment accounts, right?
Well, it's your taxable estate, whatever makes up that taxable estate, and that's probably not something we want to get into. But we have some clients that when we told them the 11.78 or whatever, they would laugh. When you tell people it's more than 5 million, they don't laugh quite as hard. So, I mean, there's the possibility that these numbers, if somebody has $2 or $3 million, even Rob, they may want to see a tax attorney.
You definitely want your team in place, your financial advisor, your tax attorney, other attorneys, I guess, if you need them. Your airline pilots, you're going to want those guys on your team at all times.
And weren't there some nuances to that as well, or maybe some action steps that people could take now potentially with gifting a little bit earlier, or maybe doing some things like that? I know it is not advice, but we'll throw out just some different ideas here. Definitely want to make sure it's right for you, but anything on that?
Yeah. So in 2021, if you have $8 million and it's going down to $5 or $6 million, you could gift and use that 11 plus $1 million gift exemption in 2021 to gift.
So you could die now? Is that what you're saying?
No, you gift.
You just go ahead and die.
No, you can continue to live.
Okay.
Yeah, you can continue to live because you're using the rules that are on the books as of 2021. And you
I
have
see.
that
Okay.
11 point, and again, I don't know the exact number, 11.8 or 11.9 million. So you could gift away a whole bunch of assets this year with that, 11 plus $1 million exclusion. And then when you die with, under the $6 million, then none of it would be taxable.
Gotcha. Awesome.
And that's per person. So if you're married, 11.7 for your wife, 11.7 for you, or vice versa for your husband. Okay, so moving along, the last thing I've got, I think, is the child tax credit, the expanded child tax credit. Kevin, walk us through that a little bit.
Yeah, so this is probably the biggest thing for our clients, Rob, because it's $2,000 per child under age. I think it's under age 17 for 2021. Might even go up to 18. But $2,000 per child. If you make less than 150, 125 head of household, 75 single, it goes up to $3,000 per child. So, this can be some pretty significant amounts of dollars, and the difference between, hey, honey, we're getting a refund, and hey, honey, we owe tax money. So it can be the difference. It can be the difference for sure. So what I would suggest as a takeaway is if you're in those income areas, like if you're going to make 170,000 in 2021, that might be an opportunity to put more money into an HSA or put more money into a tax deferral vehicle, a 401k, et cetera, if you can.
And I refer folks back to our child tax credit podcast where we talked ad nauseum on that. Hopefully not, but I think it's important to realize for a lot of folks that are under those thresholds, you've probably been getting a check from the IRS every month. And again, go back and listen to that podcast and it'll walk you through why you're getting that check from the IRS, but you won't get it come tax refund time. So just remember that.
Yeah. That one is an easy one to forget. Just think it's free money and spend it away.
Yeah. Yeah. And if you, for some reason, are getting it and shouldn't be getting it, you're going to have to pay it back. So
Yeah.
think about that. What else? What else we missed? What do we get? What else you got, Kevin? Ben?
Well, I think the major benefit here is that a lot of the things we thought were going to happen probably are not going to happen. So a lot of the clients that we work with are not going to be reamed from the IRS. Maybe that's not a good word. I don't know. But anyway, it was the word that came to mind.
I'll allow it.
Yeah. So, because Rob, I mean, the thing is, I think this is really important to say that the people we work with, they're considered high income by standards, but most of the people we work with, they're paying health insurance, they're paying for college, full price college. We have a lot of people that don't get any, types of needs based. So it's just really challenging for them. And sorry, I'm getting choked up here. It's just really challenging for them. So I think that's all good news.
Yeah, and I think it's important when you talk about that 450,000, you're going to have to make about 480,000 to hit that 450 mark to fall into that 39.6. So probably our UPS pilots, FedEx pilots, maybe some of the heavy pilots for United America. You're going to watch out for it.
You know who makes the most money, Rob?
Who?
Somebody that works at another airlines. At least that's what every pilot. That's what every pilot tells us. That's what every pilot says. They have it better. We don't have it good.
I thought you were going to say like the flying pancake pilots or something like that, or maybe the Kalinin K7 pilots or
those
something.
Guys.
Yeah,
Russian flying fortress. Tell you what.
Yeah, that one you deserve it.
They should make over.
Heck yeah. All 12 or however many people it takes to fly that thing.
Yeah. All right. Anything else, guys? Okay.
No.
We'll wrap it up. Leave you with a couple of tax quotes. A couple of funny ones here, kind of. It's income tax time again, Americans. Time to gather up those receipts, get out those tax forms, sharpen up that pencil, and stab yourself in the aorta. Dave Barry. That's courtesy of Dave Barry. This one's by Jean-Baptiste Colbert. The art of taxation consists in so plucking the goose as to obtain the largest amount of feathers with the least amount of hissing. That's it. We've arrived at the final destination of this flight 16.523 ad hoc charter flight podcast. If you have any questions, let us know. If you like the podcast, let us know. If it's too hokey, if it's not serious enough, let us know. We're probably not going to listen to you, but hit me up at robert@leadingedgeplanning.com and sign up for the newsletter at leadingedgeplanning.com to get more information. If you like what you heard, hit that subscribe button so we can reach more people. And remember, as Emerson said, the world makes way for those who know where they are going. So plan accordingly. From all of us at Leading Edge, we're out.
Thank you for listening to the Leading Edge Financial Planning Podcast. It has been our pleasure to share this information with you today. Give us a call to discuss absolutely any investment question you may have. Until next time, take care. Please remember that past performance may not be indicative of future results. Different types of investment involve varying degrees of risk, and there can be no assurance that the future performance of any specific investment strategy, or product made reference to directly or indirectly in this video will be profitable, equal any corresponding indicated historical performance levels, or be suitable for your portfolio. Moreover, you should not assume that any information or any corresponding discussions serves as the receipt of or as a substitute for personalized investment advice from Leading Edge Financial Planning personnel. The opinions expressed are those of Leading Edge Financial Planning and are subject to change at any time due to the changes in market or economic conditions.